Okay.
All right. Well, good afternoon, everybody. Liz set this up for us. She was, I don't know, if Charles let you guys know, but she was unable to attend due to she's actually getting on a plane. So, my name is Chris Murdico. I'm the internal wholesaler for the disability insurance side of things. So I'll be your go-to for any of our DI related products, questions that you might have, um, anything you might need. You can reach out to me directly, and if you need me to, I can share my contact information via email, or Charles can send it around to everybody if you don't have it already as well. But I've been with Emeritus really 9 months now, since beginning of May of last year. But I do have about a 6 or 7 year background in the disability field in my um, previous lives, so to speak. Um, so I worked at Ohio National for quite a while, and then I worked through a third party distributor for Mass Mutual for a little while, and now I'm here with Emeritus, and hopefully this will be my last stop. Um, So, again, my name is Chris. I have my presentation here today is really to go over our individual product called Cornerstone. It is new to New York, not new to Emeritus. So this product's been around for a couple of years now, but we just got everything approved and started to be able to sell the product in New York just a few weeks ago. So what this presentation is going to be is basically me going over the product, but really more so what are the changes that have happened between what our product was, which was Foundation, to what it now is in Cornerstone, and how there might be some nuances with New York, as I'm sure you guys know, working with the state, there are things that New York is a little bit more of a stickler on, not allowing certain riders and not allowing certain features, things like that. So, but I'll get into that as we go through the presentation, and uh, and then at the end, I don't know if Charles wants to open it up for any questions or anything that I can go over more in depth, but we can definitely do that as well. So I thank you for taking the time today, and hopefully will be this will be beneficial for everybody.
And everyone, if you have questions during, you can feel free to drop it in the chat. But like Chris said, we'll open it up at the end if you want to unmute yourself at the end and take questions. But during, you can put them in the chat.
Yep. All right. Great. Thanks, Charles. Okay. So as I mentioned, our original or our previous product was called Foundation, and so we have built on that by taking all of the key features of the Foundation product and kind of adding to it with this Cornerstone product. As I mentioned, it became available in New York January 27th, so you are able to sell it now. And if you go out into our, I don't know if anybody's used the illustration software before, but we have what's called Illustration Pro, which you can find on the producer workbench. You can access that, and it's already loaded in there for you. Just when you select the state as New York, it should automatically populate as Cornerstone being your product of choice for the individual product. You will still see Foundation listed as one of the products. Just a heads up. The reason for that is because Foundation is still our business overhead expense plan. So they haven't moved the BOE, the business overhead expense, from Foundation to Cornerstone. Not sure if they actually will, or if we're just going to build a whole new product out of that. But if you see Foundation in the software, it'll say BOE after. That's your business overhead expense. So just make sure you select the right one when you're going to quote. Um, Also within Producer Workbench, there's various marketing materials that you can grab. Just there's a search feature, just type it in the search, or so yes, Rosaline, yes, you do need a health license to sell the product. As long as you have your life and health in the state, then you should be good to go. You can get appointed at the time of when you submit business, or if you want to get appointed ahead of time, Charles or myself or Liz, we can work you through that as well. But yes, you do have to have a health license to sell the product. Um, as I mentioned, this product is not new to Emeritus. It was launched back in January of 2023 in what we call the compact states. So the compact states were all the states that had the same product features. Like there weren't any changes to the product. Everybody approved the same pieces to it. And then we have states like Florida, North Dakota, South Carolina, South Dakota, and Wyoming that were all approved at some point during the 2024 year. Um, and some of those have a little bit of little tweaks to them compared to all the other states. And then now we have New York, who is on board, and we're still pending in California and Montana. California, we're not expecting to see that for probably another year. Montana, as far as I understand, it is possibly approved, but we have no idea when the launch date will be. My guess is probably not until late this year, just because of all of the back office ins and outs and all that that we have to go through to get everything set up, both within the state and within our own infrastructure. So be on the lookout for that, though, if you do have any business in Montana, and then, like I said, California will be on foundation for the foreseeable future. So since we have enhancements to the foundation product, um, what we're seeing is that there's a new pricing structure, there's different riders, and some other improved features that we'll go over as we go through this. Because one of the things we found when we were talking to the field, as far as what do you want us to do with a new product, the answer was, don't mess up what you already have going. Don't mess up a good thing, just add to it. So that's basically what we did. We were able to get a new pricing structure, which allows the premiums to be a lot more competitive in the field with all the other carriers that are in the disability space. And then the riders that we added, I'll go over on future slides, as well as the improved features. But doing all of this just allows us to have a very competitive product. We are probably one of, if not number one, we're one of the top two or three in the industry now with this product specifically. As we're seeing business continue to come in, we were at 97% of goal last year, just to give you a kind of an idea. And that was actually more than what we did the previous year. We just had a higher goal than what what I think we probably expected. So we're already on pace right now. We're over 100% of goal just for year to date. I know it's early, but we're already on pace. So just give you an idea of how competitive this product can be. Also, in doing that, we've focused on enhancements to technology. I'll get into that a little bit more as we go through this as well. But we're trying to enhance the overall customer experience, not just what you as the agent would have to do or go through, but the client as well when they're going through their application or through the underwriting process. We want to make sure that everything runs as smoothly as possible, and technology is the way to do that. So as I mentioned, here are all the states that the product is approved in. New York being highlighted in red as it is new to the field, and again, California, Montana, we're still waiting on, but everywhere else we are good to go. So some of the features, like this is the maybe not so great news, but some of the features that are not available in New York that are available in other states are the first one being our benefit advancement. We used to call this the non-disabling injury feature. It's now been retermed to the benefit advancement. And the reason that this wasn't approved is because New York regulations decided that it can only be available on accident only policies. So a disability policy is not an accident only policy. Therefore, we weren't allowed to offer this. And just to give you an idea of what this is, benefit advancement is in the event that you were to have a non-disabling injury, which that's what it used to be called, but you could be advanced, or not you, but the client could be advanced $500 of their benefit to cover any medical cost. So just to use an example of, let's say you get into an accident and break your arm, or something happens and you lose a tooth. You're not going to be disabled because of that. You're not going to be able to do your job, but there's obviously going to be some out of pocket expense that goes along with whatever care you might have to have. Uh, excuse me. So emeritus advances $500 of the benefit, and if they become disabled because of the injury, then the first benefit that gets paid out on once they satisfy the elimination period, we reduce it by $500. Otherwise, it's just $500 to the client to take care of whatever they need to take care of. But New York said that this can only be on an accident only policy. We don't have that, so therefore it is not available. But if you have clients in other states, keep that in mind because it is a key feature that no other carrier has. Same with the good health benefit. We This was not on the foundation product, but it is something that has been added to Cornerstone. However, New York did not allow for it. What this does is that for every year that you are disabled, or excuse me, for every year that you are not disabled and are paying premiums, at the time that you become disabled, we will reduce your elimination period by 2 days. So if you have a 90-day elimination and you're paying premiums for 10 years and then you become disabled, we will take 20 days off the elimination period. Now you're at 70 days instead of 90 before we start making any sort of benefit payments paid out to the client or paid out to the insured. But unfortunately, New York did not approve this. Like I said, it is available in every other state. I think New York is actually the only state that didn't approve it. The reason being is that they feel that it dissuades policyholders from filing claims, like basically meaning they should file a claim, but they won't because they feel like they can get through it and they want to have the they want to maintain their non filing for disability. So when they really need it, then they can utilize that good health benefit and reduce their elimination period. So again, something that New York decided wasn't in the best interest of the client. So they did not allow it. And then student loan repayment rider, also not on the foundation on the previous product, but it is available on this product, just not in New York. And just to give you an idea of what that is, if you have somebody in New Jersey or somebody outside of New York, we will take up to 3 of the student loans that you have. So if you have a doctor that's coming out of residency and going into practice, they're going to have student loans most likely. We will take up to 3 of those for a max of 2,500, and they will pay back if they become disabled. They'll pay 2,500 towards their loans each month until they're exhausted or until the rider page or the loan page says that this should be paid up basically. So it's a nice feature definitely for your students that are medical students or maybe attorneys, things like that, people that are going to be in school for a while. But unfortunately, New York was not willing to add this to the product. Um, and then one thing that we do have here though is the Cobra benefit. This is something that they allowed to stay, and what it does is if they become disabled while they're on disability, if they lose their job, thus they lose their Cobra premium, or excuse me, they lose their health insurance, more than likely they're going to have to go on Cobra to get their health insurance, and Emeritus will pay up to $1,000 a month for individual or family towards their Cobra premium for 18 months. So this was on the foundation product. It's also on Cornerstone, and it is available in New York, thankfully. But um, it is something that we do still offer, and it is unique um, to Emeritus. And so I just saw a chat pop up. I'm sorry if I'm missing your, but while I'm presenting, the chats don't pop up as they kind of pop up real quick and they go away. But I did just see somebody ask about what the target market is. So target market for this product is your white collar professionals, um, or your business owners and the medical field. So white collar meaning an attorney, architect, engineer, something along those lines. Business owners that are in the computer industry, or even some of those that are working in blue collar occupation, like own a blue collar type of occupation, but they're not doing the work. So they own a plumbing business, but they're not actually doing the work. They have employees that do it all for them. They just are the ones that own the business and make sure everything is up and running and maintained. Um, and then your medical field, that is probably our biggest market right now. We do a lot with the medical field, from residents all the way up through all the way up to in practice. And we'll get a little bit more into that towards the end of this, but those are our target markets: the white collar slash gray collar, which is your business owners, and then the medical field. So if there are any other questions, I'll grab them at the end. If I miss them as they pop up, I do apologize. Like I said, it doesn't show them to me as I'm doing the presentation, just kind of randomly pops up. Um, so some of the new features that are available on the Cornerstone product and are available to in New York, the we've added a suspension of unemployment to the dynamic Cornerstone. So if the policy has been in force for at least a year, the client is they must be unemployed and receiving unemployment benefits for at least 8 weeks. And as long as they remain unemployed, the date that emeritus receives their request, we will be able to suspend the policy, and then we can look at restarting it once they are back to being employed. And they can do this twice during the life of the policy, as long as there's a 36-month gap between the first and the second time. We also have a new combination of benefit period and coverage period. So what we used to have a 2 age 70 benefit period, now we have 2 age 67 as our longest. And it's non-cancelable or guaranteed renewable to age 67. And then we also have 2 age 65. And um, for your blue collar type work, we have 2 year benefit period up to a 5 year benefit period. But for your white collar professionals and medical, age 67 seems to be the most common, because that's kind of the new age of retirement, is what everybody looks at, for what they use to establish the benefit period. And then we have an elimination period of, as you see on the left hand side of this graph, um, from 30 days all the way up to 730 days, so a month up to 2 years. And then what we have, it's called an accumulation period, but it has to be an uninterrupted period of consecutive days. So if you have a 90-day elimination, which is your most common, they have 180 days to satisfy the 90-day elimination period. So as long as they've satisfied the 90 days within 180 days of when they first started it, they can start to receive their benefits thereafter. If they fall out of that, then it starts over. So that's kind of where we're at on that. Some other features that we have, some highlights. We have new medical occupation classes that are under this product. The 4P and the 4D. So 4P are your risky occupations in the medical field: anesthesiologists, emergency room physicians, gynecologists, OBGYNs, reproductive endocrinologists. We consider them risky because they're more apt to file claims.
Well, I think we lost audio. Did we lose audio? Chris? Just bear with us 1 second. I don't know what happened to Chris. Oh, here he is. Chris, you're muted.
Hear me?
Yes.
Okay. Sorry, I'm not sure what happened. I got disconnected somehow. Can
Yeah,
everybody
we
see me?
couldn't hear you, and then now we hear you, so you can
Okay.
share your screen again.
Share my screen. Yep. Sorry about that. Everybody see that now? So I don't know what happened there. I don't know how long I was talking to myself.
Yeah, we see you. Hmm.
Okay. Um, so when we got disconnected, was I on this slide or was I on the previous one? Does anybody know?
He was on this slide.
Okay.
He was
Uh,
finishing up this slide.
okay. So um, the last point on the slide, we used to have veterinarians lumped into the 6A or 4A category. The A is those categories are more for like the white collar type professions. The M being medical, we put them over into the medical field, which is a big advantage for them because it does help with premiums and it sees them as more specialized in their field. So that is a nice little caveat to what we have for the veterinarians now. One other or some other highlights here. We have a 2-year own occupation, and then any reasonable definition thereafter. So that means if they're disabled, if you select this option for the own occupation definition, after 2 years, we'll look and see, okay, well, are they medically able to do a job that they're educated and trained to do? If they are, we will require them to go back into the field. If they're not, then they'll just continue to receive their benefit. Um, this is obviously the lowest of the own occupation definitions. We have 3 different ones. This is the lowest option that they have. So just keep that in mind. But we do have it available. Um, Reinstatement is permitted within 6 months of the policy lapsing. And then we have a tobacco rate differential of 30%. So if they smoke tobacco, the percent of their premium is going to be 30% higher. And for New York, there is a 1.05 state factor for all non-cancelable products in all occupation classes. So there is a state factor for New York of 1.05 on any non-cancelable policy. Some of the new riders that we've included is the benefit increase rider. This rider does not cost them anything. It's a no-cost rider, but it puts us in a space where we're competing more with the field and their types of increase riders that they have. We have a future increase option rider, but the difference between that, the future increase option, and the benefit increase rider, is that the future increase option, the FIO, has a bucket of coverage that sits, and as their income goes up, they have the ability to exercise an option to increase their benefit every year on the policy anniversary. This benefit increase rider has a 6-year window with options in year 3 and year 6 that they can exercise, but they're not tied to a bucket of benefit. So if they're eligible for it, they can get it. It doesn't matter how much the benefit is. If they're eligible for it, they can get it. If they choose not to exercise the option, then the benefit, the rider can fall off the policy. And this rider is there's a lot of that goes on with this rider that I won't necessarily get into here. We can have a whole separate discussion about just this rider, but it is new to the Cornerstone product, so it's new to New York. But it is something that we are seeing more and more, simply because one, it's not limited by how much they can increase, and two, it's free. It's a free rider that they don't have to pay for. So if they don't end up utilizing it, it's no harm, no foul, but it does give them the option to increase in the future. We also have what's called a significant financial event that can happen within this rider. We see that a lot with the medical field. Again, if you have a resident going into practice, their income is going to jump from 65,000 to 200, 300,000 probably once they go into practice. Excuse me. And in doing so, it'll we consider that a significant financial event if their increase in income is 30% or higher, or if they lose group coverage. So if you have somebody that's in in their occupation, they lose their group coverage for some reason, we can do an off schedule increase. So there is that availability, but just keep that in mind. And as I said, they're they have the ability.
Hello? So I can, did we lose audio again?
I don't know what is happening here.
We're losing you on the audio.
Yeah, for some reason it keeps kicking me off. I'm not sure why. Can you hear me and see the screen?
Yeah, I hear you very low, but I can hear you. Speak
Okay.
up a little bit.
Okay.
Very low, the volume.
Um, so another feature that we have that we've added, or that we've revised, I should say, are the cost of living adjustment riders. We have a what we had before was a 0 to 6% compound. Now we have a 2 to 6%. So your floor is 2, your ceiling is 6. It's tied to the consumer pricing index unit. So they'll receive at least a minimum of 2% a year. And what this does is it it comes into play when they're on claim. So once they've been on claim for a year, we'll look at the consumer pricing index unit and we'll increase their benefit by anywhere from 2 to 6%, depending on what that number is, if they have that as the option. The other option is 3% compounded. So if they have this as a selection, the max we'll do is 3%, but it could be 0 depending on what they have in a given year for the consumer pricing index. So this is something that's added year over year as they're on claim, so they could see so it's something kind of help them can keep up with the rate of inflation while they're on claim and not able to exercise and increase within their policy through one of the increased riders. So this is a feature that allows them to see that happening while they're on claim. We have what's called a lump sum savings rider now. It is new to the product. It's basically like a retirement plan within the disability plan. So as long as they have the rider and the policy in effect at age 60, we will pay the sum of we will pay up to, we'll pay equal to 25% of the qualifying payments that were made as long as they've done that for at least 12 years. So as long as, or 12 times, so 12 months, basically. Because it's based on the disability payments being paid out to them. So it's kind of, you're not able to put money into a retirement plan probably while you're disabled. So this kind of helps put money aside for them should they need something in the future, as a kind of extra retirement plan, because they can't contribute to their own plan while they're disabled. As I mentioned, we have different residual riders. The new one to this product is called the Enhanced Plus residual rider. Um, there's not a loss of income required during the elimination period. But then there's a 15% loss of income required after that. We will, for the first 3 months, pay them what their actual loss of income is. And then as long as they maintain at least a 15% loss after that, it'll adjust accordingly unless they've lost more than 75% of their income. Then it becomes a total disability claim and we pay the full benefit going forward. They're guaranteed to get at least 50% of the base benefit for those first 6 months. So the first 3 months will replace their income, whatever that is, whatever percentage that is. And then if it's less than 50, then we'll go up to 50 for those first 3 months, and then at least 50% for the other 3 months to get them to 6 months, and then adjust accordingly thereafter. There is a recovery benefit that basically when they go from on claim back to work, we will adjust the benefit accordingly to allow them to not have to be receiving 100% of pre-disability earnings as they go back to work. They can kind of stair step their way back into it until they get to the point where they have seen pre-disability earnings for 2 consecutive or 3 non-consecutive months. So once they get back to that, then the rider drops off, or the payments drop, and they start receiving their benefit, or just their income at that point. And our policy stops paying out. In addition, we have what's called the enhanced residual rider, so remove the plus, it's just called the enhanced residual rider. Biggest difference, it's a 20% loss of earnings that triggers this, and an 80% loss that says full disability claim is paid. So instead of 15% triggering, 75% being full claim on the enhanced plus. On the enhanced, just a regular enhanced, it's 20% loss and 80%. 20% loss to trigger, 80% loss to get full claim. And then we have a basic residual, same as the enhanced. It has a 15% loss, or excuse me, a 20% loss that triggers it. But the max that is paid out on this benefit is 50%, 50. So even if they have a $5,000 benefit, if they're residually disabled or partially disabled, if they have the basic rider, we will only pay out 50% of that benefit. So the most they can get is $2,500 if they have a $5,000 monthly benefit. Excuse me. We do have a few discounts available for this product now. We have a multi-life discount. So if you have 3 or more approved lives at the same employer, once we have that third life, once we have 3 lives, we can offer a 10% sex distinct discount. We cannot do it until we have the third life. So if you know you're going to have 3, we can't do it on the first until we have the third, basically. And then if we have to, we can go back and add it to the first and the second, however they come in. But the key trigger there is 3 lives in order to get the discount. We also have a medical resident or intern discount. This is not available to the general dentists, but it is available to specialty dentists, as well as your medical field, your MDs and your DOs that are in residency or in a fellowship program. They can receive a 15% sex distinct discount on their policy. And this is available up to 180 days after they are out of fellowship or residency. So if they're new in practice, we can still offer it to them as long as they haven't been out of residency more than 180 days. And then the last discount listed there, the association or affiliation discount. Again, this is a 10% discount, and the program has to be approved. There's a whole process you have to go through, but it has to be approved by emeritus before the discount can be offered. That's a little bit more. There's a little bit more moving parts there. Something we can get into if that comes up. We can definitely look into that. But the nice thing about these discounts is they move on with the policy. So if you have any future increases in the future for the benefit increase rider or the future increase option, when they exercise the options, those discounts also carry over to that new policy or that increased policy as well. So that's a nice feature where we don't see them drop off going from one to the other. And then we also have another discount through our e-apply. This is a 6% discount. And basically what this does is we're trying to get, like I mentioned before, we're trying to get more along the technological side of things to where we're offering a quote unquote technology discount. So as long as you use the electronic application through the e-apply system and producer workbench, so they fill out the easy app and they do e-delivery. So you're just delivering it via the the e-app system. There's a 6% discount that automatically goes on the policy. Again, it carries over onto any future policies that they do down the road that are associated with this, or any future increases would get the discount as well. And the nice thing about our discounts is that they are stackable. So if you have a medical resident, 15% discount. If they do the e-apply, 6% discount. Now you're at 21% on your discounts. And then we also have what's called a mental and nervous drug and alcohol discount. So our mental and nervous drug and alcohol, or MNDA, they're the base policy, unless an underwriter says otherwise, they're able to receive benefits up to the benefit period for any of those reasons for filing a claim. However, if your client chooses to not have the unlimited, so meaning they only receive it for a 2 year or 24-month period, we will give them a 10% discount for their basically limiting their own policy. So if they say, I don't need the MNDA for the full benefit period, I don't think it's going to matter to me, they'll still have it, but it'll be a 24-month benefit instead of to the benefit period. And it will give them a 10% discount. So now if you have a medical resident in that area, now you have 15% for that discount, 10% for the mental, nervous, drug, and alcohol limitation, and a 6% discount for the e-apply. You're at 31% discount on the premium right off the top. So something to keep in mind as you work with your clients to try to figure out, where you can kind of see help them out with premiums and discounts. Just keep that in mind. Oh, I'm sorry. Here's the slide I was talking about. So mental and nervous, drug and alcohol, 2-year limitation. This is basically what I was just talking about. It is only available on the non-cancelable product. It's not available for the guaranteed renewable. So just keep that in mind as well. And the other nice thing about this is that if they apply for it as the unlimited, so to the benefit period, so they're not getting the discount, and then the underwriter says, well, based on medical history, we're going to have to either reduce it to the 2-year, or we're going to have to remove it altogether. They actually get a 10% discount. So it's kind of weird that it works that way, but it is an option. It is not available to the 4P classes. So we mentioned that before with your anesthesiologists, your OBGYNs, gynecologists. That discount is not available to them. So just keep that in mind. We found that is a high claim reason for those occupations. So it is not available to them for the unlimited option. So that is my presentation. I know we had some kind of hiccups along the way with, I don't know what was going on. I do apologize for that. But I'm going to stop sharing my screen here. Give me 1 second.
But Chris, we had a couple of questions came through the chat.
Okay.
One I see from Rosalind. Would this apply to new doctors employed at a hospital? This product
Yeah.
or
Yeah.
this
You
occupation?
can use it with new doctors. So if you have somebody that is new in practice, we have certain limits for new in practice doctors. So they can get up to 7,500 of benefit without having to show any sort of medical documentation. So if you have somebody that's new in practice, they're within 180 days of graduating from residency, they can get the discount, that 15% discount that I mentioned, and they can receive a max of 7,500 of benefit and not have to provide any financial documentation. Um, if they want to base it on their contract, they can definitely do that as well. And again, as long as they're within 180 days of graduating from residency, they can still get the discount even on a policy where we're basing it on their contract.
Okay, great. Then there's a question from Alonzo. Who's a comparable competitor carrier for this product?
So a lot of the competition that we see comes from Guardian, Standard, and Principal. Those are the three carriers that we kind of run up against the most. We do see Northwestern Mutual from time to time. We do see Mass Mutual from time to time. But if you're ever in a competitive situation, so if you have an illustration or you have something from Guardian or from Principal, feel free to reach out to me and let me, if you have that illustration, send that my way and I can look at it. And I actually there's a guy on our team who does a lot with our competition stuff. He and I can sit down and kind of nitpick it apart to see where we compete. And there's going to be times where they win and we lose. That's just the nature of the game. But I also have competitive playbooks, as we call them, and it's a side by side of our product and the features compared to other carriers and the features that they offer in the same on the same type of product. And we have those for each carrier that we kind of run into. We've put one together for each individual one. So there's a particular carrier that you run into a lot. Let me know. I can send you the playbook, and you can kind of see a side by side of how we stack up.
I mean, for example, how would we stack up if I'm going up against Mass Mutual or Guardian? Like, how can what can we say, or how can our product uh, compete with those carriers? I'm not familiar with Standard, but Guardian and Mass in principle, I am.
So I know like Guardian's kind of on they're kind of doing some crazy stuff right now. So they might be a little more difficult to compete with depending on what we're looking at or what occupation we're looking at. Because they're kind of leaning into a lot of stuff where we don't know what they're really thinking or what they're going to end up doing ultimately, and it's a lot of it is in the medical market. But when it comes to the the one thing that we have to hang our hat on is some of the policy features that are built into our contract. But as I mentioned during this presentation, they aren't available in New York, like the benefit advancement and the good health benefit. Like those are features that are specific to our product, the Emeritus Cornerstone product. That's not available in New York, so it makes it a little bit more difficult to do it from a like here's something that we have that they don't. It's really going to come down to pricing. So if we have, if you're working with Guardian, like I had one a week or two ago that somebody had sent me over the Guardian quote, and they were quoting a lower occupation class than what we would quote. And so I had to tell them like I don't know if that's right, if they're really that class with Guardian, because if they are, then they don't stack up to us at all. We'll blow this one out of the water. If they have it wrong on their end, then we might have a different conversation. So it's almost like a case by case basis because it could depend on where we are on the occupation class, could depend on what features they're looking for. So we we are very competitive in the market with every carrier that we run into. We're going to win some, we're going to lose some. We know that it happens, with every carrier. So I would say if you have something specific, I mean, not like I said, I can send you these playbooks that will show you kind of side by side the different product features and where we have our feature is better, or maybe their feature is actually even better. It doesn't lean towards emeritus. It just gives you black and white, like this is what it is. So
And it's my understanding those companies they don't offer products to blue collar. If that am I correct? But I know Emeritus we have blue collar. Um, we insure blue collar occupation. Is that correct?
we do, yes. We can do your plumbers, your electricians. We can work with that field. It's the same product, the Cornerstone, but it's a guaranteed renewable. So if you're not familiar with that, what the difference between that and non-cancelable, basically, excuse me, the non-cancelable means we're not going to change the premiums during the premium paying years. The premiums are going to be what they are unless the insured makes a change within their policy. But usually that would mean the premium would go down, like they would remove a rider or a rider might drop off or something like that. But guaranteed renewable, Emeritus reserves the right to increase the premium on a block of business. But in doing so, we would literally have to take everybody that's under that classification. So if it's an A class, we'd have to take everybody that's on our book of business that's an A class and move their premiums up. It's never happened, but the the fact that we quote unquote reserve the right to, that's just the contract language, um, allows the premiums to be a little bit less, but it gives us the opportunity to have a competitive advantage in the blue collar market. We can offer something because we have the product that has the features available for that. They're a little bit more limited, like their benefits. They can't receive more than, off the top of my head, I think the max benefit they can receive is excuse me, is 8,000 a month. Um, Depending on their occupation, or it could be 6,000 depending on occupation. So there is, because they're more likely to file a claim, they're more likely to become disabled just because of what they do. So it is limited, but it is a product that we can offer. So it does give you another little arrow in your quiver. Is that right? Yeah. Um, so so yes, we do have that available to the blue collar market.
Right.
And Alonzo, your question about um, where do we land in terms of pricing compared to other carriers? We're pretty much right in line. Um, we don't. When I've looked at other carriers' illustrations compared to ours, and doing as apples to apples as I can in comparing, we are very close. Again, some of our product features that make us competitive aren't available in New York, which stinks, um, but price wise, we are in line with the rest of the field. Really, I
And
don't know. Go ahead, Charles. Sorry.
can you talk a little bit about the underwriting? Like how do we get these policies issued?
Yeah. So with that e-apply system, our underwriting is streamlined. So as long as you have, um, and I'm gonna do this off the top of my head, if you have somebody that's between the ages of 18 and 50, and they're applying for 10,000 or less, all we have is a tele underwriting interview if they do the e-apply. So tele underwriting interview is just a 20-minute conversation that that the insured will have on the phone to go over some medical questions, and that's it. There's no blood draw, there's no urinalysis, there's no APS. Um, if they're applying for over 10,000, then that's where the blood draw, the urinalysis, that's where that other stuff, what we call a mini exam, comes into play. If you have somebody that's over the age of 50, that amount comes down to 6,000 or less. They just do the tele underwriting interview, and then excuse me, anything over 6,000, they have to do the mini exam of the blood draw and urinalysis and all that. You have direct access to our underwriting team, so you will be assigned. Your office essentially is assigned an underwriter. I don't know who that is off the top of my head. I do apologize, but you are assigned an underwriter, and that underwriter will be the one to underwrite all the business that comes out of your office. You have access to talk to them directly. You can call them, you can email them, ask them questions. You have access, obviously, to me directly. So if you need something, I can always be a liaison between you and the underwriter. I will. go to bat for you guys for anything that you guys may be trying to get perception wise, or I mean, really that's more Liz's thing, I guess. But I can be there for to try to help buffer in between if there's something that comes up that you need help on as well. But underwriting is pretty fluid. It's um, depending on the complexity of the case, depending on how if there's a medical history, turnaround times are typically, I want to say, 2 to 3 days. In underwriting, just depends. Like I said, depends on if there's a significant medical history that they have to review, or if they have to obtain other medical records simply because there is medical history that we need further clarification on. Obviously, it'll take longer, but we do like to have, but we do have a very good underwriting team that will um, work directly with you should you have questions or need anything.
And I know the New York product, the current New York product now, we as the agency have to order the telephone interview for New York. Outside of New York, the Emeritus orders it. So is that going to stay the same, or is
Um,
that going to change with the new product?
Let me check on that. I haven't heard anything about that. Let me double check and see if that, because I know for the most part it's all done by underwrite. Like we'll send it over to the I think it's APPS that we use apps that they'll send it over to them to make the call, and then they'll provide us with whatever the result was from the call, whatever the answers were from the call. Um, I need to double check. I don't know if New York is different from that to where you have to set it up versus us, our underwriting team, setting it up for you. But I'll check into that and I can let you know.
Yeah, New York, we have to order it.
Okay.
Um, Outside of New York, they order it. So I wonder if that changes in with the new product. And here's another question in the chat. I guess we got time for a few more questions. Anybody have questions? I guess you want to raise your hand and speak live. You can just let me know. And
Um,
we have till 1:15. Mm-hmm.
Alonzo, the 10,000 the 10,000 or 6,000 that I mentioned for the underwriting, that's the monthly benefit. So if they have a 10,000 monthly benefit or less that they're applying for, it's just a tele underwriting interview for those ages 18 to 50. Um, and then 50 and older, it's 6,000 and less is tele underwriting. So yeah, it's based on the monthly benefit. It's not based on the benefit as an annual number.
What about income? They got to show proof of income, self-employed or
Yeah, so
W-2.
they'll provide income documentation. So depending on what they are, what they do, if they're a business owner, it'll that'll determine what they have to supply. It could be tax returns, could be business returns, could be schedule pages. It depends on what their occupation is and what they are within their occupation. That will determine what income documentation we need. Um, and there's a graph or like a chart in our agent guide that kind of breaks that all down depending on what they do and that will determine what income documentation would be needed. Um, Alonzo, that's a hard question. So if you have somebody who's an athlete, no. If you have somebody who's like an actor, no. We don't have anything that our product is not for those types of occupations. But if you have somebody that is maybe like a sports um, like a physical therapist, they're working with athletes, or if you have somebody that works in the entertainment industry, like an engineer or a filmmaker, something along those lines, there is the potential for that. We would have to really look into that specific person or that what they're doing. Also, on that entertainment side, if they're doing just straight freelance type work, we can't do that because there's no fluidity with their income. It comes and goes. But if they are receiving a steady income from whatever they're doing, there is the potential that we could. write something for them. We just have to look into it a little bit more to see what they're doing and how they're obtaining their income to determine if they're eligible or not. And things like that, like your different occupations or maybe your medical history, that kind of going back to what you were asking a little bit ago, Charles, for the underwriting, if you have certain things that you're like, I don't understand or I don't know if this would qualify, whether occupation wise or medical, um, you can send that to me and I can send it to an underwriter and have them review it. And they'll get back to, usually same day, they'll get back to me with, oh yeah, we're good here, or no, we can't. They'll give me a reason, yes or no. Um, or they'll give me a response, yes or no, and a reason as to why it's yes or no. So if you're ever having any that you're questioning, you can definitely send that my way, and we can take a look at it. If I don't know, then I can definitely bring an underwriter into the fold and get their opinion, or their professional opinion.
Okay, great. And then my last question is, how do we establish the jurisdiction? Because we know the products outside of New York so much better. I know on the life side, if someone has a vacation home in South Carolina, and we can use that, is that something on the DI side we can do or no?
So the way we establish the contract state is it's based on wherever they live or work. So wherever they're employed or wherever they live. If those are two different states, as long as so if you have somebody that lives in New York but works in Pennsylvania, we can look at it. If you want to, we can do it as a Pennsylvania application. It's just everything follows whatever the Pennsylvania process, like not process, but like the application is Pennsylvania. Everything is done under Pennsylvania contract. So if they exercise an increase in the future, no matter where they live, it's still going to be a Pennsylvania contract. Um, Obviously, you're going to have features available in Pennsylvania that aren't available in New York, um, with those built-in benefits that I mentioned before that aren't available in New York. So that is an option, kind of a way around some of the things that aren't available. But it's really a matter of working with that person and finding out, you know, where do you work versus where do you live. If they
And
have a vacation home in South Carolina, it's not the same because they're not there. They're only there for maybe a month or two a year. It's not the same as where they are living versus where they are working.
okay,
Um, if that makes sense.
okay, live or work. So and obviously in that situation, the application would need to be signed in Pennsylvania. In your
Right,
example,
which also means that you would have to be licensed to do business in that state.
Pennsylvania. Awesome, great. Right. Thank you so much. I appreciate it. I learned a lot just on this call. And I didn't know the discounts were stackable because you have the non-tobacco discount, and then you can do the three live same employer discount. And then I didn't even know you get another 6% discount for using the apply.
Yeah.
Right.
Yep.
So I don't even know if these discounts are illustrated on the illustration. I guess we could talk illustrations on another call.
Yeah.
Um,
Yeah.
I guess we could talk. Yeah.
There's a separate little like piece within the illustration when you're building it at the bottom of one of the pages that has that lists like discounts, and then you'll see one that says e-apply, and you just check that box, and that adds the 6% discount to the illustration. But
Yeah,
yeah,
I didn't even notice that. I'll have to take a look at that.
yeah, it's new to now that you're able to do the Cornerstone product. That's available. It wasn't available on the foundation, so now that you can do Cornerstone, it should reflect in there for you when you go to build an illustration.
That's
Um,
awesome. That
so
is that'll make our prices tough to beat with all those discounts, stack 'em.
Oh yeah, absolutely.
And then the underwriting, 10,000, just a phone call, no blood. I
Right.
like that.
Yep. Exactly.
All right, we can do a follow-up call couple weeks if you're free, just to go through that new illustration system. I'd appreciate it. And
Yeah.
I really thank you so much. Yes.
I was gonna say the week of March 17th, so middle of March, I will be out of the office for the week. We have a DI forum that's out in Vegas for a few days. Um, and then the end of that week I'll be off as well on my way back from there. So if there's a week, either the week
Well,
before or the week
check your
after.
check your schedule. We normally meet on Tuesdays at this time. So I
Okay.
mean, right now March, I don't have anything. So just
Okay.
let me know which one would work best for you, and I'd
Okay.
appreciate it.
Yep.
All
Sounds
all
good.
right, everyone. I have the recording, and everyone have a nice day. And Chris, thank you so much. We really appreciate it. And it's good to have a wholesaler now on the DI side. We haven't had any contact with anyone on the DI side in quite some time. So looking forward to
Well,
working with you, Chris.
likewise. Absolutely. If you guys need anything, reach out to me. I'm happy to help.
All right, thank you. Have a good day,
All
everyone.
right. You too. Thanks,
Take
Charles.
care. All right.
Thanks. Bye.